All right. So I'll be showing some of these other things that I mentioned earlier on this tax return. But today we're going to do a practice tax return involving a 2018 return for a head of household taxpayer who has one child. Oh, we got a question. If I have the EFIN with Pronto, will I get exceptions? Should there be a problem? What is the exceptions? I don't understand, Victoria. Can you elaborate on the word exceptions? Rejects. Yeah, if you get a rejects, that's your responsibility to fix. Okay, because yeah, you will get rejects. Because remember, the tax returns are still yours. They don't belong to me. I will be whoever is on this e-file management program. Um, I will be checking probably about 20% of your returns to make sure. I kind of want to make sure that you're doing them right because you're using my EFIN number, and I want to make sure you're not committing fraud, committing a lot of mistakes, and things like that. So you need to make sure that and also you have the software. I mean, it's going to be on your software. It won't be on mine. Okay. I'll know that there's a reject, on my reports, but I won't. You're the one that's responsible for fixing it. Okay, and that's another good reason for that tax support program. If you don't know, if you're brand new to this business, a lot of stuff that comes up during tax season. If you're doing a lot of tax returns, and so it might be good to at least get the tax season tax support. But yes, Victoria, you need to fix that yourself, and then resend it. There's a question from Moe. EFINs don't have to be renewed, right? Moe, if you filed at least one return this last year, then yes, you don't have to renew it. But if you don't do any returns within 2 years, then yes, you have to start all over again. Okay? Any other questions? Okay. So today's back to the return today. We've got Greta Wilson. She works as a paralegal. The W-2 is on the next page. Her social security number and her date of birth is there. She lives at 6888 Lexington Circle in Anaheim. Her son, who lives with her, is Timmy Wilson. He's got a social security number, date of birth, home phone, cell phone. And she's also okay with texting, and so she's willing to text with you. And her email is also listed. She was covered for health care at her job, and she does not want Protection Plus. She paid $3,000 for real estate taxes and $1,600 for mortgage interest. This is on her personal home. She also paid $200 personal property tax for her car. When you get your license renewed each year, there's a taxable part and a non-taxable part. The non-taxable part is that fee that you have to pay for the license or the plates itself, but there's also a large taxable part, and it varies with states. Okay? So the taxable part can be deducted on the Schedule A. And she gave $340 to her church. She receives child support of $1,000 per month. She also received $2,000 monthly alimony from her ex, John Wilson. Social security number, date of birth, and he lives down the street, same block, on Lexington Circle. She paid ABC Child Care $6,000 in 2018. She also received $39 of interest from Wells Fargo Bank. She sold 50 shares of Apple stock at $168 per share on 4/3/18, and she had bought it in 2016 for $96 per share. She paid $10 commissions on each transaction. And the reason I didn't put the total amounts here is because I want to kind of show you guys how to use the calculator today. She owns a rental property home on Rental Street. She bought it on May the 1st, 2017 for $400,000. Her land value is $100,000. She received $2,500 month rent from her tenant for all 12 months. She paid $14,000 mortgage, $1,200 for utilities, $1,200 to a management company to handle all the affairs of the rental, $2,400 for HOA, and $400 for repairs. She also sells Mary Kay products on the side and made $2,450 on a 1099 miscellaneous form from Mary Kay. Mary Kay headquarters is located in Anaheim. She bought a demo kit from them for $1,000. She spent $200 for postage and spent $200 on supplies. She took an Uber for all of her demo parties and spent $250. She was afraid of getting a DUI because you know what they do at these parties. A lot of booze, right? Anyway, she also received a $1 million court settlement for compensatory damages related to a physical injury 5 years ago. We're going to prepare a federal and California return. Everybody ready? All right. Alrighty. So what we're going to do is we're going to start a new return. And let's see, Greta is 650-99-9999. And look at her W-2, and it looks like it's correct. All right, we say okay. I just want to show you her W-2 information. She works at Dewey, Cheatham, and Howe. It's on Lawyers Avenue in Rancho Santa Margarita. She made $49,000. She had federal taxes withheld at $5,100, Social Security tax withheld $3038, Medicare tax withheld $711, state disability insurance $254, and California tax of $1,200. At the end of this session, I'm going to ask you if anybody out there knows what economic reality is. Okay? All right. Back to our tax return. All right. And so we're going to go ahead and start. And Greta is her date of birth is 8/7/90. Okay. No, she didn't die. She's 28 years old. Her name is Greta. No middle initial, Wilson. Another tip. If you have somebody named like Sam Smith, for instance, try to get their middle initial as well. I had an incident many, many years ago. Two people with the same first and last name each got a bank product from two of my offices, one from one office and one from the other office. They had exactly, and this is like a 1 in a billion chance of it happening, but it happened. It's a real story. So I'm just using the name Sam Smith. So Sam, they both had a Sam Smith. Their names were both Sam Smith, but one was Sam J. Smith and one was Sam M. Smith. And then they did the Social Security number. Well, we had a processing center because we were doing 18 offices. We had the processing center that would cut all the checks and everything. And what happened was the wrong check went to the wrong place. So one Sam Smith went to the other place and vice versa. And the one that picked it up first was and one of them, there was only one check for Sam Smith, and and they sent that to the wrong Sam Smith office. The person picked it up, and the other Sam Smith called us and said, "Where is my check? Because I got notification that my check is here." And what happened? What the other Sam Smith was declined by the bank and the IRS because he owed a lot of money to the IRS, and he was refused for the check. So the wrong Sam Smith got the check. He cashed it, was able to cash it at his bank. And the other one, the bad guy, or the good guy, was without money because the bad guy ran away We couldn't find them. So make sure if you have that situation with similar names, make sure you get a middle initial and make sure you make extra markings, especially if you have multiple offices, okay? Be very careful. So what happened in the end was I was responsible for a $3,500 check to the right person, and it came out of my pocket. So be careful about that. All right. Occupation. She is a paralegal. Okay. She is not a dependent. She's not blind, and she's not disabled. Her home phone number is 714-590-4555. No work phone number, and her cell number is 714-385-2222. Okay, her email address is greta@cox.net. Okay. She is allowing us to text her if we want to, and her cell phone carrier is Cox. And I guess what we have to do is go down to the choices, and hopefully, oh, there's no Cox. All right. Well, Cox is big around where I live. So anyway, you're going to say, hey, I'm sorry, but we cannot send anything to Cox. Okay. So that's that. So we say, okay, we cancel out this here, and we just can't do it. Okay. And we have to cancel here. So the preferred contact is going to be on cell phone, and her preferred language is English, and she is a female, and she did not receive a notice from the IRS during the year. So we're going to ask her for some identification, and we'll get her driver's license. Okay. And it expires 02/15/2023. All right. Okay. So she is head of household based on the fact that the child Timmy lived with her all year. She is not married. They are divorced, and so she is a head of household, which is number 4. Okay. All right. Her address is 6888 Lexington Circle, and that is in Anaheim. Excuse me. 92801. Let's see if I've done any from Anaheim before, and I have. So Anaheim pops up. She's not in the combat zone. We don't know what's going to happen yet with her tax situation. She said, let me think about it until the end. And but if I have a refund, I'd like to have it sent to my home. I'd check to my home. So we'll figure that out later. She wasn't referred by anybody, but if there was a referral, you would definitely put that there. Okay. I think she said she did not want Protection Plus, and she said that she was covered through her employer for the entire year. Okay. And she did have a child, and her child's name was Timmy Wilson. And Timmy's birth date is 9/12/14. 09/12/2014. So he's 4 years old. His social security number is 590-33-8888. And Timmy is her son. Lived with her all year. And it looks like if the numbers are right, they are eligible for earned income credit and the child tax credit. Okay. And then here is the form 2441. Okay. That's the babysitting. And we do have that. And we can go ahead and go right to the worksheet. Okay. How much that worksheet is it? I have a feeling you're going to see a change on this particular one. Because we're going to go directly later on, we're going to go directly to the 2441. Okay. All right, so we're done with that. So we'll start with the simplest thing to start off with. We're going to do the W-2 first. Okay, and let's see here. I need to go to the second page here. Okay, she works. Her employee identification number is 3265599898. Okay, and the name is Dewey Cheatham and Howe. Okay, the address is 8899 Lawyers Avenue. Okay, and it's in 92688, and that's Rancho Santa Margarita. Okay, her wages were 49,000. And let's double check the Social Security here. Automatically came up to 3038, which is correct, and 711, which is also correct. If it's off by $1, don't worry about it. But if it's off by a lot, you either, I mentioned earlier one of the other classes what to do if you either have an overage or an underpayment. And you will see that, especially if somebody's a smaller business and they maybe have a bookkeeper that's right there in their little business. It's possible that their Social Security tax and Medicare tax are not correct, and you can fix it right there on the spot. She had $5,100 taxes withheld. Okay. She had state disability insurance of $254. Okay. And she had California wages of 49,000, and she had California taxes of 1,200 withheld. Okay, no city tax, no local tax. Again, state disability insurance is not a tax. Okay. All right. So what else do we have to do? Well, let me see. So she owns a house, and she paid taxes, taxes, mortgage, interest, and she had some personal property tax, and gave $340 to her church. So I guess we're going to go and do the Schedule A next. And here's the Schedule A. She didn't have any medical expenses. And as you can see, all the numbers already moved, the taxes paid and things like that. So she paid a real estate taxes of $3,000. Okay. She also paid state and local personal property taxes. And that, again, on her bill, it says $200, but the taxable part was only $160, and that's all you can take. Okay. If she paid any other taxes, you can go ahead and put that on line 6. foreign tax paid, or any other types of taxes that are deductible on the Schedule A. She paid interest of $16,000. Okay. Uh, okay. None of this other stuff applies to her. Office and home, so forth. She didn't pay any points or anything like that this year. Okay, so that is that. She contributed to her church $340. Okay. That's 340. All right. And that is it for her Schedule A. She had no other items. She had no casualty or thefts, and she had no other itemized deductions. As you can see, if you pay the tax preparer, you cannot deduct it anymore. That thing is gone. So is the 2% deal. That's gone. But now there is no limit down here like there was in the past. So this particular rule on line 17, the limit kind of helped the rich. Okay. All right. So we're done with the Schedule A, and it looks like this amount, $20,954, is definitely better than her standard deduction, so she'll be able to itemize. Okay. All right. So the next thing, she receives child support of $1,000 per month. Does anybody know where I put that? Anybody know? Thank you, Andrea. Very good. Nowhere. It's not taxable. Okay. So thank you, Andrea. Okay, then we have alimony. Okay. So the next thing we're going to do is we're going to add alimony. Does anybody know where alimony goes? And remember that the new ruling is from now on, 1 January 2019, if you are starting to start paying alimony or receiving alimony, there's no tax consequence. But for 218 and before, those people are all grandfathered, and you can deduct alimony to the person who paid it, and the person who received it has to include it as income. And Jason, thank you very much. He said Schedule 1, so let's see if he's right. And alimony received right there, line 11, okay? So alimony, she received 2,000. So I'm not too good at math, so let's see if we can use the calculator. And she received $2,000 per month, right? And she got it all year. So that comes out to $24,000, right? So we can just insert it right there, and it went there. Okay, went right to line 11. Okay, and that's how you use the calculator. All right. The next thing, she okay, and she paid child care. Okay, so now we're going to do another form, 2441, and hopefully all of you will remember that form because that's one of the things taught in the basic tax course. So we're going to put 2441, and there it is. And let's see, the child went to ABC Childcare. Oops. And the address of Chops, 123 Main Street. The zip code there is 92647. Okay. The identifying number is 3312345667. Okay. It's an EIN number. And the amount paid last year was $6,000. All right. The qualifying person is Timmy Wilson, and qualified expenses was $6,000. Okay. Now, as you can see, she paid $6,000, but only $3,000 on line 3 is eligible, is the qualifying amount. Okay. If she had another child and had spent $6,000, she would have been able to write off the entire $6,000. Okay, so it looks like she's going to get a credit for about $600. Okay, not fair, right? Anyway, okay. So the next thing we have is interest. She received $39 interest from Wells Fargo Bank. Now, there's two ways you can do this. One, you can add in the Schedule B. Okay, and she's the sole person that's head of household, so we don't need to put TRS, and we put the Wells Fargo, and let's see what this is. We have some choices here. Is it taxable to federal and state? Absolutely. So there's no code, and she received $39. The other thing you could have done is you could have entered it right on the 1040 also, or I'm sorry, not the 1040, one of the schedules that takes the interest, and then it goes to the 1040. So you could have done it either way. I just wanted to show you how to put it on the Schedule B. Okay. She did not get any dividend income, and she did not have interest in a foreign account. Okay. And we can leave that blank. All right. The next thing, she sold 50 shares of Apple stock, and then she bought them originally 2 years ago. So let's put that in. So remember the last time we did this, we went to the Schedule D like in the old days. But now what we have to do is we actually have to go to the 8949. Okay. So since we already know that form, we'll go ahead and put that in there. All right. So the last time we made the error of not filling out every block, and that's what happened when I didn't move all the way to the Schedule D. So this time let's do it correctly. Okay, she's the only person, so that's okay. Let's see what the choices are for transaction description. Looks like this is a long-term basis reported to the IRS, but basis not reported. Transaction not. It was reported because she received a 1099-B, and it was sent to the IRS. Okay. The only thing that the IRS doesn't know is the $10 commissions on each transaction. Okay. So it's 50 shares of Apple. Okay. She acquired it on. Let's see, where is it? She acquired it on 1/08/2016, and she sold it on, let's see here, 04/03/2018. Okay, so it put the B in there. Let's see what B stands for. B stands for long-term regular transaction, which is correct. Okay. The sales price, so we have to whip out our calculator. So it said 168 times 50 shares equals, okay, so that's $8,400. However, she put out, well, she paid a commission of 10, so we have to take 10 out. So in the end, she got $8,390, and we're going to insert that. Now her cost basis was, she originally bought it at $96 times 50 equals, and she had to pay them $10. So this time we're going to add $10, and that equals $48.10, and we're going to insert that. Okay, so now we have to check our choices for adjustment codes. So technically, what the IR or what the bank reported or the stock company reported is incorrect. Okay, so what we have to do is the B. We say okay, and okay, and the adjustment is $20. But the adjustment has already been made. Okay, so we're making the adjustment ourselves. If we would have had the real numbers of what on the 1099B, that's where you would put the difference, but we did it up front. Either way is fine. Okay, all right. So next we are going to, she owns a rental home, so we're going to add in Schedule E. There it is. All right. And the address of the rental is 345 Rental Street, and it's in zip code 92647. Okay, Huntington Beach. The property type, let's check it out. Here are our choices. It's a single family residence. Okay, and so that's it. Let's see here. It's not a property type 8. Let's see, number of days rented at fair rental value, I believe is 364 days. No personal days. Okay, it's not part of a qualified joint venture. It's not a QBI deduction. What that is, if you have a self-employment, you own a company, and all you do is buy and sell, like the flippers, there might be a QBI at that point. Okay, but this one does not. All right. We don't have to do the worksheet on the passive at risk choices. Okay, so we're done. So let's do the city of the rental was in Huntington Beach. Okay, so we're done with that. And the residence, okay, rents received. She received, oh, we have to go back to the calculator again. She gets $2,500, and she got it all year. That's wrong. And this is a good thing, a good test. Always double check. So she got $2,500 and she got it 12 months. Still comes out wrong. Okay, let's start from scratch here. There we go. Much better. $30,000. Okay. Thank you, Victoria. All right. She received $2,500 a month rent from her tenant. She paid $14,000 for mortgage interest. Okay. And she also paid $1,200 for utilities. And she paid $1,200 to a management company. And $2,400 for HOA. And she paid $400 for repairs. Okay? Everybody with me? All right. So what else do we need to do? Well, we still need to figure out what to do about depreciation. Okay? And remember the last time, again, because of the new schedules and the changes in the software, there's a different way of going into depreciation. So what we're going to do is we're going to add the form. You're going to go to the index and you're going to say depreciation. Okay. And Jason, this is where you go to add that computer of yours. This is the same area under the Schedule C. If you're in the Schedule C, all you do is pull up this form here, and your computer will pop up and will tell you exactly how many years the computer is the life of a computer according to the tax codes. Okay. So we're doing the rental. And we're adding the new asset. Same thing, Jason. You just add the new asset as your computer. Okay. As you can see, Jason, right here is your computers. Okay. So it's got a 5-year life, basically. And of course, you can expense it. Computers are allowed to be expensed this year, especially at the amount that what you paid that you told me. So you can do that. So we're looking, though, however, we're looking for a rental home, which is residential rental property. Okay. The original price was $400,000. If it burned down, it would be the land value is $100,000. Okay, and so we're going to close this, and that's all you have to do. And as you can see, the depreciation expense is right there. Okay, $10,454 for 2018. Okay, all righty. So we're done with that. So let's look at it. And it looks like she had net income of $346. So she's positive on her rental for 2018. All right, what else does she have? Well, she owned Mary Kay. So I guess we'll do a Schedule C. Okay. And Because I have several computers going for this show, it takes a little longer to get to each form. So the principal business activity was Mary Kay Products. And I guess we better find what the business code is. And so we go to choices. And let's see. Anybody know what Mary Kay's code is? Business code. She's not in entertainment, not in construction, not in education, not in finance, not in health careers, not in information, not manufacturing, not mining, other services. She might be in other service. Let's see here. Dry cleaning, linen, nail salon, pet care, photo finishing, other personal services, diet, other personal service. That could be it. Let's see if we find something. Other personal household goods repair. No. Let's see if we find something over here. Legal, no. Drafting, no. Okay, I think the best one was other. I'm going to go with this one. If you guys can think of something better, if you find something better, go ahead and use that business code. But make sure that that business code relates to her expenses, okay? If you put a plumber in there and, you're buying all these demo kits from Mary Kay, the IRS is probably going to give you a nice audit. So be careful. Okay, she didn't have a business name. It was just Greta Wilson, and she ran it out of home. And she lives in Anaheim. Okay. And she uses the cash method. Okay. Did she materially participate? Yes, she did. If she started or acquired this business during 2018, check here, but she's been doing this for years, so we don't have to check that. Did she make any payments in 2018 that would require you to file a Form 1099? No. She didn't have any subcontractors or anything like that made more than $600. Okay, we don't have to do that. Qualified business indicator. Here you go. Okay. Select the code for the QBI deduction. Is she a qualified trade or business? Is she a specified service trade or business or not eligible for the deduction? She's definitely eligible. Okay, so she's either a Q or an S, and my guess is she's going to be a Q. Okay. Check here if claiming exemption from self-employment tax. Nope, she has to pay self-employment tax. She's not a minister. Was this activity disposed of this year? The answer is no. Okay. Prior year unallowed. She had no unallowed losses from the previous year, and she's not an LLC. So the gross receipts, she made $24.50. Okay. And she did have some expenses. And by the way, the income that she received was shown on a 1099 miscellaneous that she received from Mary Kay. Okay. Let's see. She bought a demo kit, and let's go ahead and just put it down here as miscellaneous. And the demo kit cost her $1,000. Okay. She also spent $200 for postage, and that is, I would put it under office expense, and that was $200. And she also spent $200 on supplies. Okay, so here, if she does not maintain an inventory, if she did, You could have done part three, the cost of goods sold, but she doesn't. She only has that kit that she takes around to all the parties, and they order from the kit, and that's it. That's her inventory. So we don't really need to do a cost of goods sold at this point. Okay. She has no car expenses because she takes Uber everywhere. So there's nothing there. So I think we're done on this one. If she had used her car, obviously she would have car expenses. We could depreciate her car. Another thing she could do is she could take an office and home. The only problem when you do an office and home, if you take an office and home, when you sell the house, you have to what they call recapture the profit. In other words, all the expenses that you took for office and home, you have to add that into the sale of the house. And I know we have great laws now where a single person can make as much as 250,000 profit, and a married couple can make over 500,000 on the sale of home. But still, some places actually those things go up that fast. Here in California, for instance, we know that homes go up very quickly. So she did not want to take the office and home. Okay. And by the way, if you take an office and home, the IRS also assumes that you are also taking depreciation. The depreciation is the one that gets recaptured, okay, when you do the sale of house. And then you have to do two different types of sales. You have a business sale and you have a personal sale. Okay. All right. Let's see if we have anything else. She received $1 million court settlement for compensatory damages. And I think somebody already answered that earlier. Compensatory damages due to physical injury are not taxable. Okay, punitive damages are taxable. Okay? So if you have punitive damages, you need to look at it very carefully. And you could also have partial. You could have punitive damages where part of it is not taxable and part of it is taxable. So if they ever ask you what kind of uh, uh, compensation you want, make sure you say compensatory damages fees. Okay. All right. Let's see. So we covered that. We got all that. We double check everything that we have in front of us, and it looks like we do. So at this point, you would refresh. Okay. And we still have to do California, however. Okay. So we're going to do California. And by the way, California, excuse me, is still not available. And this is the message. And by the way, I did update this morning, so it is still not available. Okay. So we go down to California. All right, California, where are you? Ooh, it's taking a long time to get to California. I have a pretty fast computer. Still thinking. Right now, though, we do show a federal refund of $768. Oh, there, California just popped in. Okay. All right. Uh-oh. All right. Let's see. California. We've got head of household, one dependent, and her state wages are shown right here, 49,000. Her adjusted gross income, however, is 77,941. Okay. She has a child dependent care credit in California as well. And don't forget renter's credit, okay, line 46. If your client rents you might want to ask them about that. And basically, they would just need to give you the name of the wherever house or apartment, landlord's name, telephone number, address, and so forth, and then they're eligible, possibly eligible for refundable for a renter's credit. However, it is a non-refundable renter's credit. Okay. So here it is. Her looks like she is going to get a refund of $317 from the state of California. Okay. All right. At this point, we're going to verify, and you know I'm going to come up with all kinds of errors. My 8453, because my electronic filing is not in effect yet. 8879, same thing. Some items are missing. What you do when you fix it, you just basically go and click on this, and it'll take you right to the place that it's giving you the error. Okay. I forgot to do this. I forgot to put in the driver's license. B. Okay. And then you go to verify again. And so that went away. Okay. Let's see what else I'm missing. I'm missing my EFIN number. Okay. Well, I haven't put in my EFIN number yet. Okay. So that's how you fix it. So you go to each item that you miss and just go to that line. Like here, I'm missing something from the W-2. Okay. What am I missing? Oh, they said California is not good yet. Okay. All right. Okay, so we're just about done. I got one more item, so let's switch over to the other screen. Okay. And economic reality, I just wanted to mention that, take me a minute to explain. So when you have a tax return, let's say you have somebody that comes into your office and they make $10,000, okay, and they have a child, they get no other support, and then at the end, um, they have expenses of $20,000. They have a rental house and things like that. What economic reality is that the life that that person leads doesn't reflect on the tax return. So sometimes what happens is the IRS will audit people arbitrarily based on economic reality. They're going to say, how the heck does that person how does that person live with making 10,000 and the expenses are over 50,000? So that's what economic reality is, and that happens. And it's usually when they do self-employment, Schedule C's, because you can kind of hide a lot of money there, so to speak. So that's what economic reality is. Okay.